Hi, my name is Denise Appleby and I'm the IRA Whisperer. It's tax season, it's IRA season, it's 1099R season. I'm going to give you 4 quick tips about 1099R that can help to save your client money if they're eligible. The first one is when an IRA custodian reports a regular distribution on Form 1099R, they're required to report the entire amount as taxable by including the amount in Box 1, gross distribution, Box 2A, taxable amount, but they're also required to check Box 2B, taxable amount not determined. Now, if your client's IRA balance includes basis from after-tax contributions, rollover of after-tax amounts, non-deductible IRA contributions, then generally distributions from their IRA will include a prorated amount of pre-tax and after-tax balance. But the 1099R doesn't say that. It is then the responsibility of the tax preparer to report on the 1040 that only a portion of the distribution is taxable, and that amount is determined by the tax preparer completing and filing IRS Form 8606. That's number 1. Number 2, if your client takes a distribution from their IRA and rolls it over generally within 60 days of receipt, that amount is excluded from income. But the 1099R stands. Again, it is up to the tax preparer to report that distribution as being excluded from income due to being rolled over. That is done by inputting the word rollover beside line 4B on 1040. So the IRS understands why they're excluding the amount from income. I'll talk about these lines again in a second. Number 3, if your client does a qualified charitable distribution, the amount is excluded from income, but the custodian must report it as a regular distribution. So here we are again, where it's up to the tax preparer to communicate to the IRS that the amount is excluded from income due to being a qualified charitable distribution. So that's 3. In all 3 instances, the gross amount is reported on line 4A of 1040, and any amount that's excluded from income is not included on line 4B. For the distribution of basis, Form 8606 is used. For the rollover, the word rollover is inputted to the left of line 4B, and for qualified charitable distributions, QCD is inputted to the left of line 4B. Number 4 is Box 7 of 1099R. IRA custodians are required to input a code in Box 7 of 1099R, and that code is used to relay certain information. One of them is whether the distribution is subject to a 10% early distribution penalty if the distribution occurred before the IRA owner reached age 59 and a half. Now, here's the rub. IRA custodians are required to report only certain distributions as qualifying for exceptions: distributions due to death, distributions due to disability, substantially equal periodic payment if they know for a fact that the distribution meet those requirements, direct Roth conversions. There's a code 4 for death, a code 3 for disability, a code 2 for direct Roth conversions, and some other exceptions. But the IRS have said to IRA custodians, listen, for certain other exceptions, there's no way for you to tell for sure. For instance, if they withdraw $10,000 for first-time homebuyer purposes, how are you going to know that they used it for that purpose? How are you going to know? And in that case, the instructions from the IRS to IRA custodian is use code 1. Code 1 means that as far as the IRA custodian knows, this pre-59.5 distribution is subject to the 10% early distribution penalty. It is then up to the tax preparer to file IRS Form 5329 to override that code 1. That's just a high-level explanation of the rules that apply. I'll include some links to articles that explains more. And if you do have questions, please do not hesitate to let me know. I'm Denise Appleby. I'm the IRA Whisperer. Thank you for watching. Thank you for listening.